to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
Good morning. Good morning, everyone, and welcome back to the AJ Brown Show. My name is Cyprian Francis, and with me, still on the West Coast, AJ Brown. Good morning, AJ.
Yeah, it's been a while. We really have been, as the family, having a good vacation, but this evening it ends. We go back east. We go back to my home office. So right now we're north of the Golden Gate Bridge, just barely. We're in San Rafael, hanging out in Silicon Valley the whole last week. Pretty fun times.
I could see the tan starting to settle in there.
That's right. That's right. I did spend 5 days on a dive boat out in the California Channel Islands. Just some amazing stuff. Saw lots of sharks, horn sharks, lemon sharks. Saw all kinds of octopus, lobster, the likes, everything you can imagine.
Yeah, and you shared some of those photos with me, so we'll see if we can add them to the social media because they are pretty slick, and it is impressive to see you down in those depths, swimming with these creatures. So very cool. We missed last week's episode, but it seemed like there was a lot going on in the market, right? Even though in terms of where we are seasonally, right? Everyone's on vacation. Things theoretically should be slow. But the Jackson Hole news really tanked the market.
Mm-hmm.
And, here we are this week with unemployment. So get us up to speed with everything that you're seeing on your end, AJ.
Well, absolutely. So some of the statements coming out of the Jackson Hole, Wyoming meeting were about, we need to tamp down inflation even more, which always kind of gives a little bit of a fright to investors because when they say tamp down inflation, who gets hit first but the speculators, but anybody who's in the markets. So the markets did, respond in selling off. Sip, we wanted them to. We had such I'm sharing my S&P 500 here. We had such a high kind of buy-in rate from about the middle of July to the middle of August that it was almost too heated of a rally. And so we, as kind of common sense traders who wanted to see more of a sustained long-term rally, we wanted to see a little bit of a buy-off. And so if I zoom in here, just jumping right into technicals this morning, if I zoom in here, what you can see is we kind of wanted a pullback to around half of that rally, which would have been about $4,050. We gave ourselves a range, if you remember 2 weeks ago, of about 3,990 to 4,110. We dipped down with our close 2 days ago, Wednesday, just ever so slightly below our range. So our close on this Wednesday was 3,955, a little bit lower than the 3,990. But since then, we've been having closes back up. And so this is actually kind of ringing through for us that we may actually be on a sustainable uptrend. If we see this reversal, and I just use, I haven't confirmed. When I confirm that there's been a bottom found, this little line here turns from yellow to green. So I haven't confirmed that last Wednesday's close was the bottom. So I'd like to confirm that. So I'd like to see some movement up in my lagging indicators. My 3 and 5 day EMA crossing will confirm that for me. That hasn't happened yet. But with this kind of extreme movement, here's what us technicians do. We kind of, any littler movement gets negated. So this movement that we had that started our uptrend from July 7th to July 14th, that kind of gets negated, which means if we want to really believe in this uptrend as a technician, we're going to need to see not only the confirmation of this current retracement, this current contraction in the uptrend, we're going to need to see one more expansion move that meets our ideal requirements. If we get that move in the next, during the month of September, I'd actually say even with the Fed tightening the nuts on things, we're in an uptrend. Now, if we don't get that, then all bets are off. One last thing to say, it doesn't really matter the overall trend of the market. In fact, with this retracement, with this contraction of the uptrend, this movement down over the last couple of weeks, it actually makes us premium sellers, us option traders in a really good position.
And we'll go over a couple of those examples here in the show. In terms of economic news, right? So that little pop today, or at least that continuation, is based on the unemployment numbers, which, this always confuses me, and it might confuse a lot of people watching. But the unemployment situation looked worse, but that's good for the market, and we're rallying. Can you maybe explain how that works?
Yeah, absolutely. Let's pull up that those employment numbers really quick here. They'll come up in a second. Here they come. Listen, first of all, everybody needs to pay attention to the fact that the employment situation report is a survey. It's actually a bunch of surveys that the government does every month to kind of get an idea of what's happening out there. And they're different surveys. And so that's why sometimes the results of the unemployment rate don't align up with the non-farm payrolls. But the real interesting thing is it's August. And just like I'm on vacation, August is the biggest month out of the year. And so year over year, and I've been watching this exact report for 25 years now, year over year, August is very misleading. And you'll notice that what the government does is they go ahead and they give a number, and then they come back and they really scrutinize that number the following month, and they revise that number. You can see July's number was revised, didn't change very much. August number historically changes when it's re-released at the beginning of October. So it's the beginning of September. Beginning of October, they're going to release September's preliminary numbers, and they're going to revise August numbers. And just historically, without fail, the August numbers get revised up because guess what? The corporations and the individual businesses that answer this survey, they just don't give responses. So you'll also notice that when you really delve into this report, they usually have an uncertainty rate of like 1% or so. The uncertainty rate of August is always like a huge number, and that's because these companies are off on vacation and they just don't return their survey. So I want to throw that out there. Take the employment numbers in August with a grain of salt. With all that said, everybody focuses on this number, and this number was actually hotter than expected by just a little bit, but still lower than what we have been having. So that gives us some solace because it means the Fed's actions to kind of cool things off are happening. Everybody focuses on the Fed's actions and says what they're trying to do is cool off prices, but in effect, they're cooling off the whole economy, and that means the hiring and employment too, because it's all related. It's all linked, right? If people are making more money at their job, then prices go up, right? If that's not linked, something's broken, right? If you're making more money and yet prices aren't going up, something isn't right. Somebody else or somewhere around the world is losing. So you got to remember that everything is linked.
And I mean, there may be some other pieces in this data that are decent, right? Like we got the average hourly earnings increasing. That's good.
But we want it not to increase a crazy amount, right? So yes, it increased, right? But it only increased like 0.3% compared to it increasing year over year 5%. And some of these past months, it's been increasing like 1%. Like people have been really making bank at their jobs. That's going to drive prices up at the store, the inflation up as well. So we kind of want to tamp that down. We kind of want to make it so that, people have gotten their paycheck increases, but that kind of stops for a little while, that people are, not constantly getting paycheck increases, because that means that prices are going to keep growing at the markets.
Yes, I would assume that this is kind of leading today's charge, and I guess the market's going to be keeping an eye on upcoming, inflation data to compare to the employment situation.
One thing that I take a look at is this participation rate. And I ask a lot of folks to pay attention to that as well if you're watching this report. The participation rate, of course, is how many Americans are actually participating in the job force right now. And so this number has, at least for the last almost a decade, has been incredibly low. People have taken them out. They've taken themselves out of the workforce. And so I like to see that number going up. It would be really cool if that number was in the high 60s, even low 70s. That would mean that a lot of people are working and that they're not just kind of hanging out doing what they do. If it means that you're going and taking yourself out of the employment, field because you're going back to school to get retrained, cool. But if you're just taking yourself out because you're just disgruntled, that usually leads to kind of, some disgruntled overall in the society, especially now with like social media and stuff where disgruntled people can easily catch up and meet up. So you want to, yeah, as a country ruler, and this is advice for the politicians out there from somebody who knows nothing about politics. Um, let's see what you can do to get the participation rate higher, right?
Totally. So we'll definitely be keeping an eye on this rebound. In the meantime, we're going to continue on with the show. But before we go into the next section, which is going to be basically AJ's pick of the week or the last 2 weeks, and then a couple of the member questions. But before we do that, we want to invite everybody to come and join AJ's daily workshop. If you're interested in learning more about Trading Trainer, the strategies, how AJ approaches the market, we're going to go ahead and add a link into the chat. We'll also play our little commercial here. We'll take a break and then we'll be back. If you have any questions in the meantime, feel free to drop it in the chat. We'll see if we can get to it.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
I always like seeing that video of AJ being reckless in his Tesla.
Hey, Sid, before we move on to my pick, let's take a look at the VIX. So the VIX, folks, I don't know how many of you are familiar with this, but this is a really interesting indicator. Sometimes it's nicknamed the fear indicator. It kind of measures confidence and fear in the markets. And the way that it does it, and listen very carefully, the way that it does it is it looks at the demand for options on options across the board of all the S&P 500 stocks. So if there's a demand for options, the VIX goes up. And how do we know if there's a demand for options? Well, the option price goes up, right? It becomes overbought. And overpriced, right? Because people want it so much, supply and demand. When there's a limited supply of options and people want them, then the price of the option goes up. And the VIX measures how much it goes up based on that increase in demand. And why would there be an increase in demand on the VIX or increase in demand for options? Well, that's because options offer hedge. They're a form of insurance. Like people always, especially for lack of a better word, commoners, people who don't know much about investing, they always think options are risky. The truth is options are the opposite of risk. Options allow us to predictably decide when we're going to buy and sell things, and they also offer an amazing amount of hedge for people who are afraid that the market will go against them. So they're insurance policies for traders. And so when you see a huge increase in demand for insurance policies, it's because traders are afraid or uncertain. So that's what the VIX measures. And it's really interesting to follow because you can see this dotted line I have on the VIX here. That represents the average since the VIX was created over 30 years ago. So, if I go back, over, say, the last 2 years, you'll see that the VIX spent some time below that average. If I go back the last 10 years, you'll see it spends most of its time. It's only been in like the last 4 years that the VIX has kind of gotten above average. And you'll notice that just recently, if I zoom back into about 3 months, the VIX popped up again, probably based on what we heard out of Jackson Hole, Wyoming. So investors are fearful that the Fed is really going to turn on the, put the screws to the torture device for us investors. And so that's why you see the VIX going up. And so for those of you that are just watching your mutual funds or watching your 401k, you might want to start tuning into the VIX because the VIX will give you an idea if you have to worry about your retirement, right?
Yeah, and that green pop there is the Jackson Hole news, and then the today and yesterday is basically the rally that we're seeing. So
a little bit of calm coming back in. People are
of
thinking they can get rid of their insurance policies, and that's why just in the last couple of days we're seeing the VIX come back down.
And this is exactly the type of strategy that you're teaching in your course and in the weekly calls every week. But let's get into what you're liking this week. An opportunity, a position. I believe it's a name that we've discussed in the past because I know we talked about some of the semiconductors. But a good, sexy name, AMD, ticker Advanced Micro Devices, ticker symbol AMD.
Yeah, I'm a big fan of AMD. Now, AMD and NVIDIA are two big companies. They're chip manufacturers. They get involved in, they have been involved in graphics cards, which was a major component for the whole crypto rush, which looks like it's actually crashing more and more. We can talk about that later. But AMD also then expanded their product line and got more involved in being a competitor with Intel on microprocessors. And some people would actually argue that their microprocessors are giving Intel a run for the money. They're quite sharp. The Ryzen series is what you'll hear. But NVIDIA has really taken a hammering in the last couple of weeks. AMD, just through correlation, also took a little bit of hammering. But look, a floor is being found. If I go back 6 months, you can see that we actually identified these floors and these ceilings all the way back in the beginning of May. And AMD is sticking to them. So I wanted to emphasize that AMD for a premium selling option trader is just one of the good candidates that should be on your watch list. So it looks like we are getting ready to form a bottom. I'm going to come back up to 3 months here, form a bottom. You'll look over here at my fast MACD. I'm waiting for the fast MACD to cross the MACD divergence line. I'll get a green arrow. And when I get that green arrow, basically a bottom will have been confirmed. And that's going to be giving me an opportunity, depending on where I am in my premium selling, to either get into a long position or sell back some protective options, some put protective options. Or if I'm already in a short position, this is when I want to sell my put premium and buy my call protection. So if you've been trading AMD, I give you kudos. This looks like in the next couple of days, we're going to get our next signal to take some more income or create up the next month's income trade. So I wanted to give people some heads up on AMD. It's just working out exactly like we said 3 months ago.
And so when you get those confirmations, you'll decide which approach you want to take because there's a couple ways to get into it, right?
Yeah, and I want to emphasize, people are always saying, AJ, it seems like options trading is so difficult. I got to say, the last time we took action on AMD was about a month ago. So if you think doing one trade per position a month is complex, well, then, it's not. I this is actually quite simple. We're not day trading. We're not sitting in front of the markets. We're not, the computers trying to trade the markets. We're simply looking for our timing signals, and when our timing signals come, we take action, and then you put it on the shelf and let it appreciate for the next month. I mean, and when it comes to active investing, this is as mellow as you can get, folks.
Yeah, and if you're a member of the community, it's an open discussion where these ideas and you're getting some support in your trades, which psychologically I believe always puts one at ease when other people are
Absolutely.
getting into the same thing. We did have 2 questions come in on some tickers, and I figured we should run through them before we hit some of these other names. If you want to just run through and give some insight. The first one is ticker symbol VALE, and this
Okay.
one's from our good friend Timothy Sharp. Thank you for tuning in, Tim.
Okay, so Vail, we like Vail because it's really low priced, which means a lot of folks, it opens it up to a lot of folks' investments. Um, let's see, it's trading between 12 and it looks like about $13.75. I don't have much experience with Vail, but let's take a look at the option chain. So when I take a look at Vail, Vail has strike prices that are trading every dollar, which helps for us because when you are doing those option strategies, the scoop is that the you're going to be doing the strategies at each one of the strike price increments. And so if we've got them every dollar, that gives us the granularity to kind of tweak our trade plan to work with whatever we're having. So I kind of like that it's every dollar, because the alternative would be that it's every $2.50, which doesn't make it easy for us to buy and sell premium. So that has it going for us. And the other thing I look at is liquidity, specifically liquidity on the option that I'll be using as a hedge or a protective option. And so right now I'm looking around the January 2023. Man, there's so much liquidity on this particular candidate in both the call and the put side for our protective option. So I'm liking all of that. The only thing that jumps out at me for Vail is it doesn't, you're going to have a hard time finding your tops and your bottoms with Vail, because it looks like it kind of moves from top to bottom quite quickly, in a period of 3 or 4 days. So 1, 2, 3, 4, it's got a bottom. 1, 2, 3, 4, it's got a top. So you're going to be, this is going to be kind of something that you have to be more advanced, more engaged, I should say. Maybe I shouldn't align the words advanced and engaged, but you're going to have to be more engaged and to determine the top and the bottom here. And it does look like there is a little bit of gapping, which means that the closing price of one day doesn't align with the opening price of the next day. And that makes it a little bit harder. So I would say from a actual trading perspective, this has a little bit of a challenge to it, but from an options and trade plan creation perspective, this is like a dream. So if you're kind of engaged, you're watching the markets throughout the day, you have something faster than what I use is my fast MACD. You could probably, do some stuff with Vail, but you're going to need to be a little bit more of an active investor and have your timing signals down pat.
All right, appreciate that, Tim.
Thanks, Tim.
Let's keep rocking and rolling. A name that I think is very often in the news lately, and this is coming from Andrew in Burlington, Virginia, right? No, Vermont, Burlington, Vermont.
Vermont.
And he's looking at GameStop, ticker symbol GME.
Ah, okay. All right. Let's take a GameStop. You guys know about the GameStop. It's been in the news for a couple of years now, but I'm going back. I'm taking a step back. That's what I always like to do before I start taking a step forward. So I'm looking at now I'm looking at 2 years worth of data. So GameStop was it was a penny stock almost for a while there. Then it had that big, huge pop. It went from just a couple dollars all the way to $120. That was awesome. And but what I want you to notice is if I put a best fit trend line, even from the day that it started to rally to today, what do you notice? It's pretty much horizontal, which means that us premium sellers can turn this into an income trade. So now now that I've looked at going back so many months and years, let me zoom us back into, say, a 6-month or even a 3-month chart. It's got the patterns for us to sell premium against it, and it's at a really wonderful price. So, and you can see that it's giving us really nice signals. There's not much gapping. There's a lot of width to the channel, which means we don't have to be exactly on the ball. We can miss our timing signals very well, and it would still give us a trade that can work. Although I am looking at some of this stuff like these bars here, but that was approaching earnings. So maybe what we want to do with GameStop is let this earnings is scheduled. Let's see what it says when I hover over it, if it'll say anything. Earnings after market close on September 7th. So maybe we wait a little bit until after the market closes on September 7th, see what happens on September 8th. But I'm thinking that if we're actually going to form a bottom right here, that this wouldn't be a bad symbol for us to pick up some shares, whether it's shares of the stock itself or shares of the call option. That could be a swap in, and then wait patiently. Those shares will appreciate as the price of GameStop goes up. And once GameStop tops, instead of selling those shares, let's sell premium against them, buy some protection, and turn it into an income trade, because that's been working for the last couple of years on GameStop. So I like this one a lot. The only other thing I want to check on is the option distribution. So again, I'm going to look at the January 2023 to get kind of a litmus test. Oh my gosh, check this out. This thing's trading at $28. So these are trading like every 25 cents. So you've got more granularity than you know what to do with. You also have a lot of open interest in the thousands range. The bid-ask spread, interestingly enough, the bid-ask spread is quite large, isn't it? So the bid-ask spread tells me that market makers are a little bit sketched out by GameStop, and so they're raising their premium. In other words, there's a lot of interest in GameStop, but the actual transactions between buyers and sellers is not as aggressive as the interest. So interest doesn't put meals on the table. So we want to be a little bit aware of that. But I think you could turn this into a nice income trade. Take advantage of what all these investors who have raised the interest in GameStop have done.
Yeah, the one thing that I would add cyclically, right, seasonally, is the holiday season approaching. I could see them actually, their business doing better, and that may be reflected in the stock. So that's something to keep in mind. But from your analysis, there definitely is a lot of positives to look at it and at an upside play here.
And if you are, one last thought, if you are, that you can see that there's a slight downtrend. So if you do plan to hold that initial position, that initial covering position for a hot minute, um, gosh, maybe that initial covering position should, instead of being the stock, owning the stock or owning call substitutes, maybe it should be shorting the stock or owning put substitutes, because that way, in the long term, while you're making income every cycle, that initial covering position, if the underlying symbol in the long term is going down, that initial covering position will also profit for you on the back end.
All right, moving on. Another common theme that we've been hearing a lot of lately is crypto, and so Ty from Cheyenne, Wyoming, is interested in learning your thoughts on one of the bigger brokers in the game, Coinbase. Ticker symbol COIN. Fortunately for them.
Yeah. So Coinbase, boy, I think I just recently read that they've been letting go of a lot of their employees. I think Bitcoin recently, I think if it's not
like 20K. I keep
I
getting
was gonna say,
notifications. It's like, oh, dip below 20K.
Yeah, that's a big deal for Bitcoin. So yeah, as I look at Coinbase, again, I like to always start off by zooming all the way out and then zooming all the way back in. Let's take a look at a 2-year chart. All right. So the question that we have about Coinbase is, have we found a floor at $50? Because it has been having some sour grapes recently. If I come back to 6 months, it looks like it has found a floor around $50. It's a little bit difficult with Coinbase. It kind of depends on what your outlook on crypto is. And let me preface this and say the Fed hates it, and so does the US government, right? They kind of, if they have to live with it, they're going to live with it, but constantly like pick on it, like the older like the old brother, right? The older brother is always going to pick on the younger brother, and that's probably going to happen. And the Fed has, targeted it, and especially with the Fed's bond selling that they keep talking about. They mentioned it at their Jackson, Wyoming. They said, "You think we've been selling bonds? Just wait. It's going to really become aggressive." That's going to, really nail some nails into the coffins for cryptocurrencies across the board. So, does Coinbase have a future? That's really the question that you have to be asking yourself. Now, if you believe it does, and you'd like to own Coinbase as a stock for the long term, I would use that naked put, or that nowadays they like to call it the cash secured put strategy, because what you can do is you can come over here to the option chain, and and I would do this every month. You could set the price that you want to buy these shares of Coinbase at. So say, for instance, Coinbase is currently trading at $66. Say I only want to buy shares of Coinbase if I can get them for $50. So $16 less than what they're currently trading at. So if I did that, I would sell this First of all, I'd have to make sure I have the $50 per share in my bank account in cash, ready to buy it. If I'm going to commit to buy it at $50, I better have the $50. If I've got the money set aside to buy it at $50, instead of just buying it outright at 66, I would sell these $50 puts. And so the $50 put is going right now for about 62 cents a share. That means about $62 per contract. And so you make that money, and you get that $62 per contract for every contract you sell of those $50 puts. If September 16 rolls around and the price of Coinbase never dipped to $50, you're allowed to take that $62 and it becomes part of your portfolio. That's cash for you. and you do it again for October. And you keep doing this, making these little chunks of change until you're awarded the $50 buy price for Coinbase. If you're never awarded the $50 buy price, you just make this like couple of dollars. It's not a couple of dollars, it's $62 per contract every time the month rolls around. So the third Friday of the month becomes your payday until you actually get to buy Coinbase at the price you want. Remember, I was talking about how options aren't risky. They actually allow you to create certainty. You have now created the certainty that you'll be buying your Coinbase at $50. Otherwise, you get paid for your effort of waiting.
And that's one of the lovely strategies that you can implement using options to take long, take short positions, collect premium.
That's what I would do with Coinbase. Yeah.
All right. So that's our Coinbase play from AJ. Moving on to Davis from Asheville, North Carolina. He's interested in a classic, I believe, ticker symbol AA, Alcoa. This is the aluminum company, right?
Yeah. Yeah. So the aluminum company, there's a lot of repatriation of manufacturing here into the United States. And so, Alcoa has been, they're a aluminum company. They've got a lot of stuff here in the States. They also have a lot of stuff around the world. But, it has proven that Alcoa doesn't go below $45. And so this is creating for us a really wonderful strategy that we can create income on, knowing that $45, they're going to do everything as a company to keep their stock price above $45. So zooming on into about a 3-month chart, listen, I can see we just had a signal back on Tuesday of this week. If you wanted to either buy some puts or short the stock, it looks like there's still an opportunity to take advantage of that signal. So, this could be the beginning for you, whether you're paper trading. If you're unsure of the strategy, you always paper trade it. But this could be a great point for you to start selling some premium. If we either short Alcoa or buy some put options to substitute, put options work like shorting. In other words, when the stock goes down, put options go up in value. Just like when you short a stock, you want the stock to go down. So we go ahead and set up that initial covering position. As long as the stock goes down, that initial covering position gains in value. As soon as that stock stops going down, rather than simply buying to close or selling to close if you bought the put options, instead of just ending the trade, instead sell some put premium and buy some protective calls at bargain basement prices. And that way, when the symbol's moving against you, you're actually making income on that move against you. And that creates our income positions. And I think that Alcoa is set up well for us to do that. And if you decide to miss this opportunity or paper trade it, just look for the next bottom, because you can then reverse the whole trade. You can then buy some Alcoa or buy some call options, and now you're going to be selling call premium and buying protective puts. It doesn't matter which way you do it, because there's always a reverse or an opposite trade you can do.
Yeah,
I like
great.
it. I like it.
Great pickup, Davis. I like it too, and I like the ability to get flexible with the entries and to be able to hold it for a while. It definitely fits into that premium strategy that you continue to preach. That is great for different types of portfolios, and
Absolutely.
all right, so let's we did have one more question come up from the audience that I think is worth looking at. It's ticker symbol FFIC, and I believe this is a bank, Flushing Financing Corporation.
Yeah, it looks really, really nice. This particular candidate looks like it's forming a bottom. I haven't gotten my fast MACD signal yet to say that this bottom has actually happened. Dividends were given out yesterday. But yeah, let's take a look at the option. Okay, so I just switched over to the option chain. And the option chain, I can tell, not even looking at the actual options, but looking at the expiration dates, we don't have a lot of choice here. So if I look at the February option just was created for us to trade it. And so there's very little open interest on it. There's the bid-ask spread. The market makers are so afraid, since there's not enough people buying and selling, that if they do get involved in that transaction, because market makers like to make liquidity for the rest of us traders, they're going to want a huge premium, as you can see by the bid-ask spread. If I look at the November option, which is probably an option that I would use as a protective option, it's also lacking liquidity. And so even though the pattern looks absolutely fantastic for selling premium against, the option traders are just not there to make it possible for us. So one of the things we look for not only is the underlying symbol pattern, but that the options market can sustain us being involved, that there's actually buyers and sellers of the options. If there's no buyers and sellers, when you're ready to buy or you're ready to sell, there's not going to be anybody out there that'll say, yeah, I'll buy that from you, or yeah, I'll sell that to you. There's just not enough people around the table doing transactions. So I'm not sure that this is a company, a bank or a company that I'd like to have in my portfolio long term. So yeah, I probably, even though this is a fantastic pattern, it's at the right price, the option chain isn't supporting us making premium, making income off of it.
You win some, you lose some, and that's just the evolution of the investor. I did have a question personally, a name that's in the news pretty much since the beginning of the day, and that's Lululemon, the yoga pant
Yeah.
manufacturer. Was very optimistic in their earnings, in their forecasts. The only issue that came up were their inventories, and I think you talked about this a few times. Is all these retailers are slammed with inventory.
Yeah. And actually, I've been noticing, this week, just on a side note, guys, this week, manufacturing reports came out in addition to today's employment reports. And manufacturing reports across the board are strong. So, a lot of us are now able, the pandemic is I wouldn't say it's in the rear view mirror, but it's slowed down significantly. And a lot of us are going out to restaurants and things like that. We're taking the dollars that we were using to buy stuff, especially through electronic retailers, and now we're using it to have experiences rather than the stuff. But it seems like the market for stuff is still strong. And I'll tell you, my wife loves this store. She loves to get her sweatpants on. I mean, they're fancy sweatpants and they're expensive sweatpants, but they're sweatpants nonetheless. Suffice it to say, yeah, if we look at the chart, today after the report of earnings, first of all, earnings was a really healthy. This is a nice stock for for getting earnings. There was a pop-up this morning, so there was some excitement with the earnings release, but it wasn't too drastic, meaning that they had topped out about 2 weeks ago. It'll be interesting to see if they break that ceiling. Now, Lululemon, if I take a step back, I'm going to go to 2 years. I'll go to a 2-year daily chart. Despite all of this bullishness, the stock seems to be in a range, right? It's not trending by any means. In the long term, it kind of stays on an average price. Again, what I like to do is I like to take one of these computer generated best fit trend lines, start at the left of my chart, bring it to the right of my chart, and just look at the line. It's horizontal, which means the stock price really hasn't moved much in the last 2 years. It just kind of goes up and down, sideways, choppy. This could be an income potential producing stock. And so, one of the things you have to keep in mind, though, is it's kind of pricey. And
Yeah,
so
that's
you're
what I
gonna
was
need
thinking.
you're gonna need to have a bigger portfolio to trade this and keep your risk appetite. The only other thing I want to remind people of is, even though options are inexpensive, we don't um, we don't uh, budget for them based on their price. We budget for them based on the amount of risk they carry along with them. So we budget for the risk, not for the price. So even though they're cheap, they might have some risk built in. And so that's what you want to budget for. Stocks, indexes, ETFs have a lower amount of risk budgeted into them versus options. So when you're buying options, even though these things may be super cheap, their risk is super expensive. So budget accordingly.
Yeah, it's interesting. You said your wife is a fan of Lululemon.
Yeah.
One of the commentators mentioned that they're breaking away from just active wear and it's becoming workwear. And I was like, oh, that's an interesting way to pivot. But I guess the point was that it's becoming more of the norm to be able to wear clothes like that in the workplace, right?
I mean, I don't mind because they look amazing, right? And even the dude, like, she's bought me some stuff. I'm not sure. Well, I work from home, so I can wear whatever I want. But I'm not sure I'd go into a workplace with some of the outfits on that I bought. But she looks great in her Lululemon wear. So if people were walking around me with those Lululemon outfits on, I'd be okay with it.
Yeah, and as a retail company, I think we're happy to see some winners, getting through this inflationary period and just
Absolutely.
these changes that are happening. All right, well, that was I think 4 or 5 picks that we ran through. So for anybody watching, listening for the first time, we just added the link to AJ's webinar in the chat. So if you want to go ahead and check that out. But AJ also has a new program that was recently launched, and that's the one-on-one coaching. So I'm going to go ahead and throw that link in the chat. AJ, do you want to give a quick little 2 minute pitch on what happens when you become, when you get into that one-on-one program?
Yeah. Most folks' coaching program involves you meeting one on one with somebody and them kind of hand feeding you information, which is great. And we do that as well. We can hand feed you, take you through. We also, along with this, though, give you a 1-800 number that you can contact us every day if you like, and talk about your question, or if you have a position that you've planned out, talk about the position you've planned out. If you've got a position that you're in and you need help managing or adjusting it, you could call that 1-800 number. You'll get a live person, and that's part of the program as well. So in addition to us meeting with you for a certain number of sessions on a weekly or bi-weekly basis, you also have that number. So if the coach gives you homework and you don't understand what you're doing, you're going to get another coach on the line, or you're going to get your coach on the line for a 15-minute session. And you can do that as many times as you want. So we want to make sure that if you're doing one-on-one coaching with you, it's not the traditional, it's above and beyond the traditional. And the last thing that's really cool is, in a lot of our coaching programs, and this is so critical, I want everybody to hear this, after you've had your formal sessions where we've pounded your brain with a bunch of information, we don't want to just leave you hanging. We want to make sure that you use that information, because if you don't, it'll go in one ear and out the other, right? And so we want to make sure you use what you've learned in order to not only, start to do some investing, but we want to guarantee that you make your money back on the coaching program. In other words, we want to make sure that by the time you're done with us, you've made more than you've paid for our coaching. And so what we do on many of the coaching packages is after you've had the formal sessions with us, we are going to trade with you for 6 months, meaning you're going to join us every day for about 5 or 10 minutes and discuss what the day of investing, what the day of trading, active investing is going to be doing for you. And we're going to be, looking over your shoulder. You're going to be putting into action what you've learned so that it really solidifies it. You're going to learn while you earn. You're going to trade with us. We're going to be showing you what we do and how we run our business so that at the end of the 6 months, you've made back your money on the coaching program. You've made back, you've reinforced what you learned when you were meeting with your coach one-on-one. And again, during the whole time you have any questions, you pick up the resource line, you give us a call, and we work through it. Because one of the things that always frustrated me, Sip, was when I take a coaching package, take a program and want to learn it. First of all, the last thing I want to do is just sit in front of the computer screen and learn from videos. There are people who can do that. I don't have enough time for that personally. So I rather have somebody just working with me. And I don't want to wait to text in questions. Again, some people have the time to do that and they have the discipline to do that. I personally don't. I want to pick up the phone. I want my question answered right away. And that's what this program is catered to those people that, they're very focused on getting success, but at the same time, they know what their capabilities are for learning, and they'd rather just work with somebody rather than, get a self-study program.
Yeah, and if anyone is watching that wants to get more information now, head on over to the link that was just added in the chat. Scroll down, and there will be a form that you can pick a date and time that works best for you. If it's today, great. If it's later this evening, next week, someone will get in touch with you. We'll answer all your questions, break it down, and just really give you the honest truth of what it's going to take, to become a successful investor. And it's better doing it with those that have succeeded on the path and providing tips than, like you said, watching the videos, which is just it's just a different way of learning. So AJ, thank you for the rundown there. Once again, we invite everybody to check that out. tradingtrainer.com/apply-for-coaching. The link is in the bio. It's your last day on the West Coast, you said, yeah?
Yeah. In fact, I think we have a 7 p.m. flight out of San Francisco, and then back to the home office, back to the grind. It's perfect because, the Labor Day holiday, it marks the end of the summer doldrums. Investors are going to be coming back from their vacations as well. Kids are getting back into school, and the market usually picks up in the autumn timeframe. So I'm ready for it.
Yeah, back in the office. We'll be back in the screens next week. Hopefully there's a lot of action in the news, a lot of opportunities. If you've enjoyed the broadcast, hit that like, hit that follow, hit that subscribe button. Smash it. And if you have any questions, leave it in the chat. Hit us with a DM. We'll get back to you as soon as you can. Otherwise, we'll catch everybody next week.
Take care, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.